Is there anything that you can leave to someone listening who's probably a college student who wants to break into VC, especially in the crypto side of things, because that's where the excitement is for them?
And what I quickly realized was venture was a space where you were able to not only research, but complement that research.
And most people might think this is a joke, but how much of your time do you spend researching on Twitter?
Oh, all day. That's my job. I'm just a Twitter bot.
How do you look at crypto markets? Do you look at them as cycles? Do you look at them linearly? GM, and welcome everybody to the PYOR podcast, where we talk to crypto VCs, industry veterans, and the protocol and the investment side. Today, we have a very, very special guest. He is the youngest member of Placeholder VC. In fact, he just graduated college. We have Gurnoor Singh Narula. Gurnoor is a research analyst at Placeholder VC. Gurnoor helps the team with due diligence and research. He joined blockchain at Berkeley when starting college and has served as the head of the startup Accelerator. I hope I'm pronouncing that correctly. If not, Gurnoor can, of course, correct me. A researcher with Berkeley Center for Responsible Decentralized Intelligence and the president of blockchain at Berkeley. And quite recently, in fact, this year itself, he started at Placeholder VC as a research analyst. So he has his knees deep in a bunch of crypto topics, and we'd like to go through them point by point. But Gurnoor, how are you doing? Where are you calling in from?
Oh, good, Akash. Thank you so much for the intro there and having me on. I'm actually here in New York. Made the move pretty recently, and excited to be in the city now after college, getting connected into the New York crypto ecosystem. There's just so much energy here, and excited to be contributing to Placeholder from this part of the world.
What is different between, say, the East Coast of crypto in the US versus the West Coast?
Both are definitely good in their own ways. With the Bay Area, I had kind of the backing of Berkeley with me, and so I could approach everything as a student, and that really helped because when you have two powerhouses of universities over there leading blockchain efforts, respectively Berkeley and Stanford, what you really have is a conglomeration of a lot of young talent that's entering the space. And being surrounded by that as an 18, 19-year-old was really inspiring because you see peers like you doing incredible things in the industry, and it only pushes you further. The one thing though, and while I respect San Francisco and the Bay Area's kind of knack for innovation, and historically it's such a rich background. I would say that with different technological trends, and we'll talk about this, like cycles and all come and go. I think the Bay Area is naturally a little succumbs to that a little bit more so, given that it's driven by whatever's the newest thing in the space. Whereas I think New York is a little bit more diverse, or at least that's what I've felt since moving here, where I've interacted with founders, researchers, and investors who invest and build in all parts of the spectrum, right? Consumer, infra, whatever you want. And so that's been pretty interesting, kind of transitioning as a professional in the space rather than a student, because just being exposed to so many different opinions has been great.
You started college back in COVID, right? 2020.
2021, yeah, yeah. So right in the thick of COVID.
And since then, crypto's gone through a ginormous evolution. I think NFTs were pretty hot in the summer of 21. Now we've seen the NFT market barely breathing, and a lot of different themes are sort of coming up. So these cycles sort of probably 2 to 3 years long. How do you look at crypto markets? Do you look at them as cycles? Do you look at them linearly? And if so, what signs do you look at to see which part of the cycle we're entering or exiting?
That's a good question. So when I entered, the big kind of thing that pushed me into it was the whole mania associated with DeFi back in 2021, and the fact that we were seeing what were traditional financial services being built in a decentralized way. And of course, there was a lot of hype around that. And I guess that seems to be the word when any bull market comes around is, right? You have some sort of use case that's kind of caught on and reignited some excitement within the space. I think we like to picture the blockchain space or crypto in general as this kind of very separate entity in the whole realm of technology. Maybe because it's doing things so differently, or it's fundamentally re-envisioning how we interact with the internet, for example. But I don't think so that the blockchain space or crypto is an exception when it comes to kind of this cyclical nature of tech markets. We at Placeholder, and that's why I like the team so much and had a passion to join Placeholder, is kind of the long-term thesis that we have when it comes to how the blockchain space historically relates to tech cycles that have happened in the past. And what this does is that it frames the blockchain space as just another evolution of technology rather than its own separate thing. So to touch on that a little, as someone who's grown up digitally native, I had to kind of go into the history books and read about this a little. But what I learned is that kind of information technology is kind of evolved in these multi-decade cycles consistently, and history kind of repeats itself. Well, you'll have like an introduction of a new open standard or a new type of technology. And this new open platform becomes a shared standard on which a lot of people can innovate and build. So this attracts some sort of entrepreneurial talent. And because there's so much opportunity to disrupt the status quo, new entrepreneurs come in and kind of build successful platforms on top of these shared protocols or standards. And when you have these entrepreneurs come in, some of them find the correct use cases, whether it's on the infra side or the consumer side, and they start to replace incumbent technological powers with their own successful startups now. This slowly transitions into monopolistic platforms because they use scale network effects, and we've seen this in the past to kind of consolidate. And then the whole new cycle repeats because now margins suddenly get higher. People look for new open source alternatives to kind of topple down the incumbents now. And this entire cycle repeats of open source standards and technologies being utilized to fundamentally change kind of the tech space, which has become a little bit more monopolistic over time. We saw this with IBM in the introduction of microprocessors, Microsoft and Linux, networks like Google, and now hopefully what's replacing the current internet architecture, which is crypto networks. And so that's in a much broader lens. But then when you kind of put that under a microscope and focus on specific features that enable growth, and then kind of the fall, and then kind of a recomposition of the market within crypto or the blockchain space in specific, you have certain technological innovations that guide these kind of this S curve or these cycles. And I kind of state some of that in a piece I'm writing about parallelization, in that parallelized tech is kind of enabling some of the S curve internally within the crypto space. But that's kind of what I look for. And I think in general, the space looks for is these kind of more revolutionary technological innovations within the blockchain space that cause some sort of mania because it's testing out, infra use cases. The mania then collapses naturally because you consolidate to some use cases, something sticks to the wall. You have some sort of recomposition where people realize that, okay, these are the use cases that actually work. And then the recomposition has kind of this slow growth cycle where people continue building on the space that actually adds value rather than throwing that technological innovation to anything that they see.
Got it. And do you think this happens, the sort of recomposition to monopolization to back to recomposition happens in cycles? And if it does in crypto, what are some of the survivors that you see that people are sort of glued towards, whether these are at a chain level, whether these are at an application level, whether it's DeFi as an application, NFT as an application, DAOs as an application, etc. Do you see them as survivors? Question A. Question B is, if these are survivors, do you look at them as having certain survivorship traits? Like these are the reasons these things would survive. Is there any particular trait that you look at to see that, oh, this is the reason why this survived over the past cycle, for example?
Yeah, that's a good question. And I think the easiest way to explain it is probably like the whole mania we had around tokenization. So the simplest way I think we can dumb it down is the survivors have a common trait where they're actually building something that users value. It seems like a very simple statement to make, and but the more that we look at stuff, the more we realize that a lot of things that are being built in the space are taking one sort of technical innovation that someone has come up with and trying to force fit it into any avenue that we can.
Mhm.
And that's when you get the rise of, people saying certain buzzwords are going around. If you add, for example, ZK to any project, you can raise money. All of that stuff comes when people try to take some sort of innovation and force fit it to basically anything that they can find, because it so on so does it better or add
Mhm.
some sort of. And tokenization is a perfect example, right? When you saw that off-chain yields were higher than on-chain yields, where was the demand? The demand was that people on-chain wanted access to treasury yields that existed off-chain without porting all their on-chain capital off-chain, right? And so the survivors or people that were successful were somehow able to bring that treasury yield and give it make it accessible to on-chain investors. Beyond that, then what you had was people realized, oh, okay, tokenization allows for that accessibility, makes it decentralized, permissionless, introduces liquidity into new markets that we can exist that can introduce on chain. And so then you had people that basically wanted to tokenize anything and everything that existed, art, real estate, commodities, et cetera, et cetera. Now, I'm not saying that's wrong. Like potentially, over the long term, there could very well exist liquid on-chain markets for those assets. But in that time frame, this was, maybe a couple of months ago or maybe a year back now, the demand, the value that the users were wanting was access to higher yields that existed off-chain. And the survivors naturally were the ones that built what the users want. And anyone building beyond that, could very well build a cool product, but it was maybe just too early for its time, or users just didn't demand it. Hence, no one actually participated in that on-chain market. And so I think looking at that tokenization space is kind of a good case study to see that when you have some sort of new innovation that's introduced in the market, and we'll talk about this more if we end up covering the whole crypto AI space, which has been incredibly noisy so far. What happens is when you have this new technological innovation, people look at it through the lens of being in the blockchain or crypto space, and because of that, try to force fit it and throw it into almost any avenue that they can. Versus what we should really be focusing on is, okay, we have this new technological innovation, users are demanding X, and this innovation can be applied to Y so as to fulfill X. Let's build that. And I think those happen to be, the companies that kind of make it in the long term.
Did you have a lot of tokenization projects pitching to your placeholder?
Well, this was before my time at the firm, and so I had the opportunity to look at the tokenization space as a student researcher
Hmm.
with at Berkeley. And so it was great for me because I was able to talk to founders, teams, and in general look at the space from a very unbiased, non-investing type perspective. And I think and kind of this kind of been replicated here at Placeholder as a research analyst. I'm like on the ground doing research and talking to founders from that perspective. And so I don't really have to worry about the entire should I invest in this or not? Is this an investable opportunity or not? But rather can understand these teams, projects, and people just as curious individuals who are looking to add value and contribute to the space. And that's a great opportunity, something that I've carried forward from college, because then you kind of have a more open mind and you can kind of see the project for what it is and the people for who they are.
Coming from a sort of student perspective, which you had like a few months ago, to now a proper investor's perspective, did your sort of mindset change from consumer to a more institutional mindset?
In what regards?
In the regards of looking at products. So when when you were a student, I assume you would use a lot of crypto products as a consumer. Now you're looking at it from a more institutional lens, because I'm sure you'll have B2B protocols coming to you or infra protocols, which we as consumers don't generally use on the front end, but they're used on the back end and they're essential on the back end. But now you're an investor, so you're looking at everything full suite, whether it's consumer, whether it's front end, whether it's back end, whether it's institutional. So from that, did your mindset sort of switch from a consumer to an institution?
I think it was a mix of both. I think when you're a consumer, and I remain a consumer of crypto products till date, that level of degeneracy is weighing down but hasn't left. Um, when you look at stuff from a consumer's perspective, you realize, and then you also understand the technology on the back end, to some extent. I think you realize how there's still scope for a lot of efficiency, on that end. Where it's something as simple. I was reading a tweet today, by I think by the Aptos team, where it's so interesting to see that when you send a transaction, across almost any network, let's say, it's very difficult to know. It's kind of a black hole on where it went, right? On the back end, you don't know if it's been confirmed, if it will be dropped, changed, what price your thing will be transaction will be fulfilled at, if it's a DeFi based transaction. And so when when there's that level of obscurity or a kind of uncertainty still, on the back end, that those are the types of things that you realize as a consumer. And so I wouldn't say that mindset has changed because there's so much interplay between the two. There was another quote that I was reading about where there's this kind of now shift on at least crypto Twitter that, okay, we're changing from building infra to consumer apps. That's great. I think we've reached a certain inflection point where our infrastructure might be good enough where we can start pivoting and exploring ways to onboard users rather than building in this bubble. But the thing we should realize more and more is that you can't ever build one or they aren't mutually exclusive. As consumers get onboarded, as it scales, you realize more and more so that the infra is not there yet. And that the base level of infra that you built still needs some sort of innovation to happen. And so if we have this mindset that, okay, we built the infrastructure, now we're going to pivot to consumer apps. The more and more you use consumer apps, the more you realize that there's still a lot of infrastructure to be optimized on and built on. And so I know I've rambled a little there, but while my activity might have changed as a user to more of an investor and researcher, I think there's still interplay between the two, and it's important to understand both sides because that's when you realize that, okay, as a consumer, there's certain inefficiencies that have to be filled in on the infra side. When you continue building infra, it's like, okay, how do I take this to the next level, abstract it away such that not only crypto users, but for example, my parents are now able to use Web3 applications without knowing that they're, having to understand or going through a whole education learning curve of what crypto or blockchain is.
Can I ask what they use and how did you onboard them?
My parents?
Yeah.
Well, they haven't done it yet. They haven't done it yet. So that just tells me that there's ways to go when when building consumer applications, such that it's easy for them to, I don't know what it'll look like, but signing on to a wallet and holding some sort of digital assets without knowing kind of what's going on the back end, or just having a certain level of trust and security that I don't know what's going on the back end, but it's stable and secure enough that I can kind of place my trust in the system.
It's interesting, right? Because most well-known crypto apps or DeFi apps specifically, because that's probably the largest market, have been consumer first, and now they're adopted by institutions. You mentioned tokenization; that's one way they're adopting them. But how has the institutional, say, DeFi stack, how has that changed over the past few years? I know you've been just sort of looking at this from a research point of view for the past few months, but you've been interested in this for the past few years as well at Berkeley as well. So how do you think this institutional DeFi stack has changed, and how do you envision it changing as either more institutions get on it or more real world assets are put into DeFi?
Well, it's important, I think, for any industry, to kind of onboard the big guns, right? And so you can stay, and that's a lot of what we've seen so far is you can stay catering to retail traders, right? And so I'll take kind of a step back. So far, blockchain networks are distributed compute networks that have been utilized primarily for financial purposes. that's the reason why just to provide some context, like whenever I talk about it catering to users or catering to institutions, it's in a financial context.
Got
Just
it.
because everything that almost every successful application has been some sort of financial in nature. That's just, what we've seen so far. And so when we talk about catering to users, we talk about catering to retail traders. But that only exists, and there's kind of a cap on that market. And so there's kind of a need to bring in these institutional players that bring in those big bucks, kind of get exposure to a larger part of that market. And so far, anything that's kind of restricted these institutions from coming on board is regulatory uncertainty, and just uncertainty with the type of technology they've used. So hence the entire tokenization trend and this whole institutional kind of DeFi stack, which is kind of an oxymoron, but we'll go with it, all kind of started with institutional interest in using what they call distributed ledger technology or blockchain, to kind of make some stuff more efficient. And on the consumer side, to kind of have access to that off-chain yield. And on the institution side, they've been using and pushing this whole DLT agenda, because there's of course some certain efficiencies that come with clearing, settlement, interacting in a kind of a multi-party environment. However, it's kind of contradictory because these big institutions still want to retain control over the database that they're transacting on. Hence the rise of these quote unquote permissioned blockchains, which in my mind doesn't make that much sense, because blockchain technology in general, when comparing it to other database solutions, is strictly less efficient as what I've seen. Just because there's been so much more research and optimization on other methods of storing and kind of transacting with your data, right, as compared to blockchain networks. And so permission blockchains to me doesn't make too much sense. And where I'm envisioning a world potentially in the future is where at the worst, these institutions are kind of acting as trust anchors of some sort, with some sort of on-chain identity on what are permissionless networks. But we'll see where it goes there. There's a lot of research to be done in that space. And I think that's more dependent on where regulation kind of takes us. What's more interesting to me is how consumers interact with institutional products on chain. And so, as I mentioned, right, about a year back, the yields on Aave and Compound were strictly less than the yields available by Treasury, like US Treasury bonds and US government securities off chain. And so naturally, people on chain were like, dude, we need Treasury bond yield on chain, and we want some sort of tokenized version of this to exist so that we can put our capital to use without actually having to kind of off ramp into the real world, or I guess more traditional asset space. And so what these protocols did was the same messy back end stuff still existed, where they need centralized custodians, they need to interact with these custodians to purchase and somehow stored the US government assets that they've purchased, but they provided a nice quote unquote tokenized front end to users who wanted to purchase these treasuries without actually having to off ramp all their capital. So while that's interesting, kind of served the purpose, I don't think it's particularly innovative, because if you think about it, they've kind of abstracted everything away on the back end, and the real innovation is that they've provided a nice front end. And in my opinion, that's not as innovative as where I really think what would be super cool is when you can actually issue assets natively on chain, and there exists some sort of legal middleware to be able to transact in which would otherwise be traditional assets, right? So you could envision a world where instead of issuing, government securities or something with custodians, you're actually issuing it on an Ethereum or something, and you can transact, and that's counted as legal tender. But until then, these protocols that kind of serve as a middleman, or for example, Superstate, which is kind of a recognized investment management company that's utilizing like Ethereum as a secondary ledger. Those will remain successful and remain interesting, and kind of bridge this gap until these kind of digital ledgers become a state of truth or law. and that's all regulatory kind of based.
And do you think at that point on-chain can compete with off-chain? For consumer demand, probably it could be, but for the larger institutional demand, would it still compete on-chain versus off-chain?
Well, that depends on how efficient on-chain is, right? And I think performance and security are probably the two biggest kind of factors that influence whether that competition is possible. Performance all comes down to, in what my opinion is, how far we can take the trend of like multi-threading and parallelization forward. I think if we look historically, every technology has somehow made leaps and bounds of innovation when they introduce parallelized architecture. We've seen it with hardware, we've seen it with software processing, and now I think we'll see it with time to finality, transaction speeds, and just processing in general within blockchain networks. So
Can
I
you
think
take a
that's
step
what.
back and sort of just explain what parallelization is for the people, for the uninitiated?
Yeah, no, 100%. It's it's synonymous with doing something simultaneously, right? So performing tasks simultaneously. And with respect to blockchain technology in general, I think it happens primarily at two levels from what I've seen, on the transaction side and then state access and memory side. So when you think of Ethereum, for example, it's a single thread environment and where you process transactions one by one, right, or sequentially, regardless of if they have dependencies or not. So let's say Akash, you and I are transacting, and two other people across the world are transacting. Um, it'll still be processed sequentially, regardless of the fact that they are completely unrelated. What new layer one and potentially layer two solutions are doing. So to name a few, you have Monad, Aptos, Sui, Movement, Say, except as Solana, for example. What you have them doing is that they, at the transaction level, are processing transactions simultaneously based on dependencies that occur between these transactions. And so some of them are doing it deterministically, where you have developers declare these dependencies upfront so that the scheduler or the network knows, okay, these two transactions are dependent. We have to process them sequentially. And the rest of them, which don't have declared dependencies, we can process like simultaneously. And then you have other networks which are doing this optimistically. So they kind of batch them in simultaneous processes from the get-go. And if there's conflicts in that, one needs to be after another, based on, I don't know, timestamp of sorts, or they access the same type of memory or same space of memory, then what they'll do is they'll like go back and resolve these transactions post that fact. So these are different approaches at the transaction level. Which one wins out and which one theoretically has a higher processing ability is, I guess, based on time, and we'll just see. But that's one part of it. The other part of it is setting up innovative ways in which these networks access state and memory that each node stores, which is also it's a more of a technical problem, but a really interesting technical problem to explore. You have Monad doing it in one way, you have Say doing it in another way with their different databases, and then you have Solana taking a completely different bet on hardware scaling and kind of providing these parallelization capabilities.
And most people might think this is a joke, but how much of your time do you spend researching on Twitter?
Oh, all day. That's my job. I'm just a Twitter bot. No. Twitter is a great resource for sure. It's cool because if the more active you are on it and actually make insightful comments or replies to what are, in my opinion, some of the most accomplished people in the crypto space, it leads to some very, very interesting conversation. On the same, like on the flip side of that coin, though, There is naturally a lot of noise in the space as well. And I think a large portion of that is because a majority of the space does exist on that social platform. And so you just have to be careful to filter stuff out. But I think that's kind of how I got my start with being in the loop about the space day to day as a student too. Just following the right accounts and kind of paying attention to the people that I respect the most in regards to either the investments that they've made, the products that they've built, or the research that they've done. And so when it comes to staying updated on what they're doing or what they're thinking, I think Twitter's a great platform to be. And then I just kind of use that, and any terms I'm unfamiliar with or any cool papers that people have released to just kind of go from there.
Your Twitter is very interesting, and apart from your tweets with Placeholder, you also post some really cool Twitter spaces. Unfortunately, I haven't sat in one of those, but I've heard good reviews about it. You recently had a very long Twitter space about the Ton ecosystem. What interests you about the Ton ecosystem, and how do you see it evolving from, say, the foundation of Telegram, the social media app?
Yeah, no, that was a cool thing that I wanted to try out. I think with something like social platforms and just kind of building your brand and getting yourself out there, it's best to just kind of start and see where it goes. And so hopped on that space to talk about a little bit about what I'd learned about the Ton ecosystem and some of the internal conversations that we've had about that whole space, just because you've seen a lot of venture and investment interest and a very, very large amount of it in that ecosystem. And I'd say maybe I have a little bit of an opposing view from some of the people that have backed it. So originally, I was pretty excited about this space because what you have is the largest community on one application. And what you naturally think you're doing is by building infra around that community to provide them with applications kind of in this neat one-stop shop type application. Intuitively, it makes sense because you have the user base and now you can kind of transition them onto your network rather than what we see with a lot of L1s that don't end up working out, which is you have the infra, you have all the support to build applications, but you don't have the developers or the users to support that. And so they just don't grow. Now, after that conversation, what I kind of realized is that there's a lot of competitive forces because the blockchain space is so global. And so naturally, you can't expect that one network will kind of rule them all just because every application, every protocol, every network will be optimized in some way, shape, or format to be more competitive than its counterpart. And so drawing these comparisons that the Ton ecosystem is akin to, for example, WeChat, which provides all these services to, I think the Chinese or the East Asian market in one kind of nice application, I think doesn't work just because there's so many applications and networks that can outperform Ton on different sort of metrics. And so naturally, I see that regardless of the amount of user base that they have, you can't expect that this network then engulfs all of those users. Two more interesting points about that. One is I think the developer community is what makes up a network, and I'm not sure how many developers from the Telegram community are quality enough to contribute high impact projects to that network as compared to just being users of crypto or passively engaged in the ecosystem. And then point two is I think naturally what Ton can be really good at is providing these kind of mini apps within their Telegram community already. But what we see is that it's not like Ethereum has its own social media channel or communications app. Solana has its own Aptos suite, like the whole Move ecosystem have its own. No, Telegram has just become like this way of communicating, and it's not really siloed on the type of ecosystem that you exist on. And so making the assumption that now all Telegram users will transition to Ton just because there's a related network doesn't really make too much sense in my mind, just because they already have networks that they kind of have pledged their allegiance to without having communications app that goes with those networks. So yeah, overall, I just think that consolidation will naturally succumb to like competitive forces, and where different platforms are just naturally happen to be better at for certain things.
And what would the Ton ecosystem be naturally sort of better at, given that they have the distribution, they have the Telegram distribution, but it isn't going to spill over from a social media app to a Web3 platform? Do you think that they would take some sort of a market either, or they will just stick to a communications platform, a Web3 version of it?
Well, just from my perspective, I think it could be it'd be great if, I mean, the communications applications, I think, naturally caters itself to these kind of more social consumer facing kind of these mini apps that I think can be built on the network. Um, and I think, yeah, I'll leave it at that. But some of these mini games, different ways that you interact with other users, uh, marketplaces, etc. I know it's a vague answer, but I'm just trying to draw parallels to some of the other social apps that we've seen. Instagram, Twitter, Facebook. They've launched inbuilt stores and marketplaces within their applications. They've launched, for example, like dating pages on their application. They've launched these kind of mini games that you can interact with your friends with, and I think Telegram might be able to do that for maybe a crypto community. But I'm not sure much beyond that, just because everything happens in a much more financial context, and I think that there's networks and applications that are well positioned and more competitive than maybe the Ton ecosystem is.
Got it. And for the people listening, none of this is financial advice, so don't listen to this in long or
Yeah.
short term, right? Short term or long term. None of this is neither from Gurnoor nor from myself. But that is certainly a very, probably not hot, but it's a lukewarm take on the crypto market, and that is exactly why I am speaking to you. But beyond the Ton ecosystem, on the established L1, L2 ecosystem, do you have any particularly spicy takes? Either as it can be not as a VC, but just as a general enjoyer of crypto.
Well, I think it's become pretty obvious that the big three have become Ethereum, Bitcoin, and Solana now, and each provide utility in different ways. Bitcoin with its store of value as the asset, kind of acting as some sort of digital gold, kind of being a pioneer within the space. Ethereum introducing smart contract capabilities, and Solana taking parallelization, or taking the next step with parallelization, to introduce this new class of applications that aren't possible on the other networks. Because, and I think I've mentioned this in another talk, and it'll be pretty apparent in a piece that I'm writing. But in past networks, you see high value, low velocity applications because the cost per transaction, the cost per interaction is pretty high. And so what you'll see is people transacting little but high value just because that's the only thing that makes sense. Why have you seen meme coin culture, this more quick, what people call like degen trading and other sort of interactions on something like Base and Solana? Because, and whether that's enabled by parallelization or some sort of other technical innovation that's increased the speed and efficiency of the network, it enables a class of applications that are high velocity and low value. So kind of the opposite of the past. And that's why you see on Solana a whole swarm of applications that you won't find on the Ethereum L1, just because they're serving different markets because of the native differences that exist within the network. It's not a hot take by any means, just an observation that I've kind of seen on Twitter internally as a team. I don't know if I have any hot takes on the whole L1, L2, L whatever side, but I am working on like the intersection of understanding AI and how it relates to crypto. And I do have some strong opinions there that I could share.
Please feel free.
So okay, so a lot of people I think view the whole AI ML space, at least who exist and work in the crypto industry from that lens. And so it comes back to we have this new exciting innovation. Let's try to force fit it. And so when you view that industry from the crypto lens, naturally your mind defaults to how can we bring this component of the stack on chain? How can we bring that component of the stack on chain? And instead of actually seeing the industry for what it is, you have people trying to force fit different components of the AI stack on blockchain networks. And while I think, long term, it's a multi-decade kind of observation, maybe that works. I think in the short term, medium term, we have to be a little bit more realistic, where maybe the inferencing layer above is the only component that exists on chain. You think about the rituals of the world, the pocket networks of the world. I think inferencing becomes a core piece of the kind of the problem that exists on chain. Maybe agents track their moves and their actions on chain, and payment rails also exist with some context in crypto. But I think anything below that, from foundation training, compute, hardware accessibility, all of that remains centralized just because it's so scarce. Naturally, you have centralization forces when you have and introduce a new technology into the market. And I think that there's people that are, of course, people will disagree and think otherwise, but just kind of an opinion that I have that I'll shed more light on with a piece that I'm going to release soon.
And if that comes out before this podcast comes out, please share it across with me. I can add it in the show notes here so that people can directly read it. For the listeners, this podcast should come out probably the first or the second week of August 2024. We're recording this in July 2024. The last question I have for you, Gurnoor, is you broke into VC, at least the crypto side, very young, or at least as we would see it. Is there anything that you can leave to someone listening who's probably a college student who wants to break into VC, especially in the crypto side of things, because that's where the excitement is for them, and as it was for you? How do you get identified by a New York-based Silicon Valley-based VC?
I'm pretty new to the space too, so I'll do my best here to kind of compile any and all learnings that I've made. And it's cool to have a platform like this, and hopefully many more in the future, because it's all about like kind of paying it forward, right? Or else there's no real point of doing this in the first place. And so I'm more than happy to share. And I'm very, very grateful that the firms in the past that I've worked with while I was in college gave me that chance, and the team at Placeholder has kind of taken a bet on me as a research analyst. But when I got started in the space, I got started in as a founder, almost like everyone does, kind of tinkering with different ecosystems out there, building and launching just basic protocols and applications just to see and kind of learn through experience. And what I quickly realized was venture was a space where you were able to not only research, but complement that research with interacting with very interesting individuals. And the more you grow and kind of develop on the platform side, you can still remain a founder, in that you continue interacting with different projects and helping them out. What I really liked from the start is that venture is kind of like the scientific process that you learn in like grade school, where you're able to develop a thesis based on your research, and investing is the phase where you're kind of doing the experiment. And while the time scale is large, you either tweak or strengthen your hypothesis based on, I guess, how well the companies that you invested in did. And so that's what really drew me to the space. And then from there, it's similar to any other role you would take, in that it's all about providing some sort of unique value to the firm. What some mentors in college taught me was that you break into venture, and in crypto is notoriously easier to do because there's no professional kind of stipulations or kind of norms that you have to associate with. You have people of all ages doing crazy things all the time, and so I think it's a great place to kind of break into VC from. But I'd say you either go in as a researcher or bring that startup operator experience. And I did the former, where, as someone who had deep research skills and abilities in college, kind of carried that forward and developed my niche. And I think it worked out with Placeholder because I was able to bring in some sort of value that could be a value add to the team. And so I think that's what I'd recommend to anyone trying to break into the space is find your niche, find kind of the area that you're passionate about, whether you're a researcher or coming in from that startup operator experience. And naturally, you'll find a firm that you fit with because you're actively being a value add to that team, something that they had been missing, wherein now you can convert that addition of value into some sort of investment guidance or advice to kind of elevate the firm. Beyond that, saying yes to every opportunity, that served me well, especially when you're learning. And while you're always a student, naturally, when you grow, it becomes a little bit more exclusive. But in the couple of formative years, it's important to say yes to everything and kind of be shaped by the experiences that you kind of throw yourself into. So I'm excited to keep on doing that, and I'd recommend that to anyone trying to break into this space as well.
Solid advice, man. I think that would be super helpful for someone coming up. And this podcast has been incredibly enlightening for anyone new or old in the crypto space, veteran or newbie. We spoke about a lot of interesting things. If anybody wants to follow you or follow your work at Placeholder or just follow you in general, how can they do that?
Well, as I mentioned, like Twitter's probably the best way. Shoot me a message on Twitter. Basically exist on there as well. Telegram too, of course. And then as I kind of get more involved with writing a couple of research pieces, I want to look into more long form writings. The Placeholder blog and equivalently on my personal Substack is a great place to go. Yeah, other than that, I'm mostly accessible all the time. So always down to have an interesting conversation.
We'll be sure to link all of those places that Gurnoor mentioned in the docs to this podcast as well as wherever we post it. But thanks so much, Gurnoor, for taking this time. It's been a superb conversation, and I'll let you go now. Thanks everyone
Thanks.
for listening.